Hey, what's up, everyone? We are live here in the Sheridan Studios, going live, talking about investing in real estate in any economy, in any market, and really winning. Right here, I have some investing rules. Oh, by the way, I started a new page called Butte County Real Estate Investors. If you're looking for investing in real estate, Butte County, I encourage you. I'm doing a lot of exclusive videos there, just teaching about this, but I thought this was kind of a good general video for everyone, so I'm just placing it on my normal Facebook page. But we're breaking down deals, real deals in the real market for people. So anyways, encourage you to go on Butte County Investors and join that group. It's really cool. We're having a lot of good conversations. But anyways, I want to talk about investing rules for any market. I have right here a graph. You can see real estate prices right here. This is kind of what's happened in the last 20 years or so. We have the year 2000. We kind of went up. We spiked at 2008, 2007, right around there. Took a sharp decline with the mortgage crisis of 2008. Went back down. We had a lot of foreclosures in this time. Anyone who purchased real estate at this bottom market looked like a real estate genius. You did very, very well. And then we've come back up. 2019, we're just a little bit higher than 2008 in many places, not all places, but basically we're back up there. And so a lot of my friends, investment friends, and people who I'm talking to, are saying, man, it's time to sell. And that may be true for certain situations. And if you sell, it's called liquidating. You're going to pay taxes, usually 40%, which is kind of it's tough. It's tough to do that, but you can. But it's not necessarily a bad time to buy if you follow certain real estate investing rules, okay? There's certain rules that if you follow the rules, you will win in any market, in any economy, as long as you keep your eye on what fuels real estate. It's not so much the real estate prices, but when you're investing in real estate, you're looking at apartments that you're going to rent out. So really what you want to look at is where are the rents going? This is what you want to speculate on, not the prices of houses, but where are rents going? That's this red line right here. It's also important to note rents are fueled by wages and jobs, okay? That is the fuel, and that is what you really want to be looking at. Wherever you find a lot of jobs and high-paying jobs, you will find high rents, period. Jobs, and wherever you find a depressed job market and low wages, you will find low rents, okay? And the cool thing about this is that you can see things coming from a long way away. These markets, the job market, the rental market, wages, and these things move slowly. So I live in Chico. If they were going to shut down Chico State, that would affect our jobs here. That would be the time to sell. But that would be a slow moving process. You would see that coming from miles away. In California, we know the wages for minimum wage jobs is going up 8% a year, mandated by law. We know these wages are going to continue to go up, and that's especially important for the rents for, say, 2-bedroom, 1-bath, $1,000 a month, apartments. I mean, those are fueled by, 2 roommates working at Starbucks, and they can live off that, okay? So here's the rules that you got to follow. It doesn't matter where the real estate prices are. If you follow these rules, you're going to be safe for the long run. Here's the rules that I share with all my investors that, man, this is what you need to look at. You have to put 25% down, so you have to save, okay? We're going to talk about saving for a down payment in other videos. It's got a cash flow on day one. This is the problem right here where so many people lost. They bought real estate that did not cash flow. They had negative cash flow on it. They were subprime. They put $0 down. This is where it was just a disaster. They weren't following any of these rules, okay? So the rule is 25% down, and then it cash flows on day one. I encourage people to invest in B and C properties. These are kind of like the little bit older, but the rents are going to be a little lower, $1,000 a month, 2-bedroom, 2-bath apartment, what have you. I believe that's always going to be in demand. Everyone needs a place to live and work, just a job as a clerk, as someone in a restaurant, as someone just serving coffee. So I think that these are going to be safe bets, definitely. In a downturn, people may lose their boats, their cars, their luxury houses, but there's always going to be a demand, even more so in a down market for the B and C apartments. So I think you're going to be safe in the up markets and in the down markets with that asset type. And then also, it's got a cash flow, and you have to, this is what I always say, you have to have full service property management, you have to have your landscaping included, your maintenance expenses included, and your reserves for capital expenditures. One day the roof is going to go out, the HVAC, you want to be setting aside $80 a month or whatever it is for the property that you have. to pay for those things, say in 10 years down the road when they happen. So if you can cash flow after all your expenses and all your reserves, then it doesn't matter where this is. As long as your wages are going to be solid and your rents are going to be continually going up. In California, just passed AB 1482. It's a rent control law. It just says basically increase rent 7% a year. That's a crazy increase every single year. So we know that we have room for all of that. That if you follow these rules, if you bought here at the very top of the market in 08 and you followed these rules, you'll be just fine all the way through. Matter of fact, because the rents went up, you'll be doing better and better every single year until today. The problem is people didn't follow the rules. These are the rules you have to follow, and these are the deals that I'm bringing out that follow these rules. And 99% of the deals out there that I'm seeing don't follow the rules, and people buy it, and it's a bad deal. But you got to understand those rules, and I have these. If you go to Butte County Investors, I got all kinds of examples where we're breaking down deals. So that's the thing. You want to focus on jobs, wages, and rents, not so much this. And also, here's another thing that a lot of people say. When the market goes down, that's when I'm going to buy. The problem is I don't think we're ever going to see this again. I don't think we're ever going to see banks and mortgage brokers just doing a fire sale on houses. There is private mortgage insurance now. There's 20% down. No one's getting houses at $0 down like they were in the past. We're just not going to see. The federal government came in and paid off all those bad loans. And there's so many more protections and safety valves out there now. I just don't think that we're going to see this. I think a lot of the people, if this real estate curve goes back down, what you're going to see is people holding on to their investments and not selling. So there will be no opportunities. People are going to hold up. They're not going to take $100,000, $200,000 loss when it goes down on their equity if they're cash flowing every month. I just think what's going to happen is this is going to go down and there's just going to be no deals. So the deal is, if you want to invest in real estate, follow the rules. Make sure these things are in order, and if they are, you're gonna have there's never ever gonna be no risk, but you're gonna have a lot less risk, okay? And you're gonna be safe, I think, for the long haul. Again, the rules are 25% down. It's got a cash flow day one. B&C apartments, that's what I like, and then including full service property management, landscaping, maintenance, and reserve savings. So that's it. Get on my Butte County Real Estate Investors. We're gonna have more videos. It's gonna be great. That's all.